kind of rare here the way it seems here lately, but a bit of a surge in the grain markets here and the crop markets overall. This is a little bit unusual, but I think the trade has in mind that we're going to get some kind of nasty crop condition reports later on today.
Yeah, well, as you had mentioned, it's nice to see a risk-on morning as opposed to a risk-off morning, risk-on. A lot of commodity markets rallying, and a lot of this, I think, really on the back of the U.S. dollar staging a little bit of a retracement. And we've kind of in that day and age now where we're all currency traders by default. You get the dollar right, you get a lot of things right. You look in the outside markets, you're seeing the dollar weakness play into strength in things like crude oil, gold, etc. Obviously, the grain markets are benefiting from that as well. Now, weather is going to continue to be a very important factor going forward. We know that hot and dry temperatures throughout the Midwest and Southern Plains is still a big question mark. We know that the cash market is still strong. So I wouldn't be surprised to see a little bit more upside here in this corn market. 627 to 630 for that September contract is going to be a big barrier that the bulls want to get back out above, though. This is previously important price points as well as a 200-day moving average. If we can get out above there with some conviction, there's not a whole lot of resistance till you get upwards of 660.
So what do you see if you look at the, let's choose November new crop soybeans right now? What do you see on that chart?
November soybeans are looking up and up this morning. They still got some work to do on the charts. We've had a lot of technical damage in some of these grain markets done over the last month and a half, and a lot of that I think is due to seasonality and long liquidation from the funds. We saw Friday's commitment to traders report funds reduced or sold another net 25,000 contracts. 17,000 of that was long liquidation. They're now only net long about 95,000. So we know that there's a good catalyst to the upside with fundamentals, but it seems every rally we've gotten recently, the managed money has used that as an opportunity to lay off some of the risk that they're still holding.